Hello everyone. So today we're going to be talking about crypto trading. So in the last 14 or 15 episodes we've been talking about crypto investment, and today we are talking about crypto trading. So first of all, what's the difference between crypto trading and crypto investment? So we'll start with that explanation and that difference between investment and trading. But before we get on to that, a few things that I wanted to explain. One is I've been explaining right from the basics of what crypto is and what crypto investment is and how to do it step by step, slowly from my episode 1 till now. And sometimes people ask questions without actually fully seeing a video as well. Some basic questions, and they also make basic mistakes like missing out some of the tags or some of the information that I talk about, or not verifying your mobile number in some of the exchanges like BitTrue, for example. And then they end up coming back and asking, no, I missed to do that, because they haven't seen the video fully. And some of the comments on the video with basic questions are fully explained in that video itself, and they don't have the patience to watch the video. So the thing is, if crypto trading is like car driving, right? If you know how to control the steering and the accelerator and brake, that's not enough to drive. You need to know the traffic rules, you need to know the road safety rules, you need to know how to drive the car safely. Otherwise you'll end up crashing it into somebody else, harming yourselves and harming somebody else as well. That's the same with anything, and more importantly investment, and especially crypto trading. You need to understand the whole economy behind it, all the warnings and all the learnings that you need to understand before you actually start doing it, which is why I've been making detailed videos. And especially this video, it took me several days and several hours to actually make this content. In fact, I had to remake this content multiple times because I was feeling that this is not clear enough. It wasn't interactive enough to explain it to someone. So this is a culmination of so many days and so many hours of effort. And it's a very long video. So people, before you ask the question, why is it long, watch it fully, and you will know that most of the information is relevant to this video, and only by explaining all of this you will be able to understand exactly what is needed to do effective trading for crypto. So let's get on to the video. So first of all, let's start with the difference between what is investment and what is trading. So we have explained about investment, right? It's a very simple process. You buy something, wait for a few days, and then you sell it off. And what's the difference in trading? So I'll take a very simple example, a real world example. Somebody who's buying lemons, unripe lemons, and then selling it and making a profit out of it. So in a normal investment scenario, this guy buys the unripe lemon and then waits for 30 days for the lemons to ripe. And then after that, the value of the ripe lemons go up and he sells it at that point of time. So that's a normal investment process. So he buys, let's say, 100 quantity of lemon at $1 on price on day one, and he spends $100. He waits for 30 days. The ripe lemons are now worth $6 each. So he sells it for $600. He gets a $500 profit. So he buys it once, waits for 30 days, sells it once, and that's investment. And ultimately, he's basically not doing anything in between that point of time. He's waiting for the right opportunity to sell it. Now, if he gets the $6, maybe before 30 days, he could sell it. I mean, he has a target in mind and he's basically selling it. That's an investment scenario. Now, what is trading? Let's assume there is another trader, another guy who buys the lemons in the morning of the market. Every day morning, he buys it at $1. And he realizes that at some point during the market day, it goes up when the crowd is at its peak in that market. It goes up by about, let's say, 10 cents, from $1 to $1.1. So he sells it at that point for a $10 profit. So every day he's coming in and buying it in the morning, and he's selling it for a $10 profit for every day. So he makes $10 profit on a daily basis, which means if he repeats the whole process and if he's consistently able to do it in 30 days, he gets $300 profit in the whole day, but he gets $10 every day as a profit. That's a simple trading scenario. Now imagine someone who wants to basically build on this process and does it on an hourly basis. He realizes that the crowd comes in and goes out every hour, and then the market price kinds of changes on an hourly basis. So he realizes that at 8 o'clock in the morning, if he goes and buys it, it's $1. And then it goes up, every hour it probably goes up like 3p or 3 cents or 4 cents. And roughly, let's assume every hour it goes up by 3 cents. So which means he's making $3 profit every hour. So if he's able to do it consistently, buy it, sell it, and then rebuy it again, for $100, then he is literally making, for every hour, he's making a $3 profit. So This is basically, again, there is a lot of risk involved here, where earlier the first person was only waiting it for 30 days and he doesn't bother any fluctuations during the 30 days. The second investment, the second in trading scenario, that person was doing it only once per day, so his risk is much lesser. Now this person has taken a bit of higher risk and is doing it every hour, and he has to consistently get that profit. But if he is able to do that and he is able to get that $3 profit on an hourly basis, then he is able to do it 5 times a day, which means he is able to get $15 profit in a day. And that means his monthly profit, if he is able to do it every day consistently like this, is about $450. So which means by trading more, he is able to get more profits as well, even though the one-time trading profit is much lesser than the first person who was trading it at a $10 profit for the whole day. This person is getting $3 profit for every trade for the same quantity, but he's doing it more often. So which means that he's getting more money. And again, you know, another scenario where somebody is smart enough, even smart enough, it's a small boy, for example, is running from one corner of the market to another corner of the market, and he's doing it every 30 minutes, right? And he's selling it at an even lesser profit. He's selling it for $2 profit. But because he's doing it more frequently, now he's able to generate a $2 profit for nearly 10 times a day, because he's doing it every 30 minutes, which means he's generated $20 profit. Now this person, this kid who is actually running from one corner to another corner, because he's done it much more frequently, and even though the profit margin is very small, now he's getting a profit of $600, which is more than the $500 that the investment person has got. So if you are able to trade at a frequent basis, and if you are able to trade smarter, take more risks, sometimes you could end up with a higher profit as well. So that's the difference between trading, and that's the difference between investment. Now, what we have talked about is that consistently you are able to meet these profits. Sometimes, you know, you might make more profits. I've taken an average. I've oversimplified the entire process, right? So you may not be able to hit the exact margin every time, but you know, I've kind of made it as an average trading profit. Sometimes you might be making more profits on that particular half an hour, you know, than the whole day. Sometimes you could be making like less profit in a day than the half an hour profits. And in the above example, I've kind of made it clear that the person is not reinvesting his profits. He's keeping the profits every time, and he's reinvesting only that $100, the initial investment, every time. So which means that he's taking the profit and using it. Now the other alternative to it is he's reinvesting the profits also, which means the profit starts to compound, which means ultimately the $600 profit could be even higher if he's reinvesting the $2 profit back into the investment strategy. So that's what a difference between investment and trading is. So what are the risks in crypto trading? I mean, if you can make more money out of it, then why not do it, right? Why is that we have not talked about it? The risk is even higher. I mean, already the crypto volatility is very, very high. The risk of crypto trading is even more higher, and especially in complex trading platforms built for trading. As a beginner, it's really easy to make a mistake. It's like, you know, driving some car that is too fancy to drive and you're not able to control it because you don't know driving to that extent. And there are certain exchanges, you know, we spoke about GeoTest, I think, in my episode 13. There are some exchanges where the liquidity is really bad, especially in most of the Indian exchanges, the liquidity is really bad. I'll show it in the demo why it is a problem. And this could end up in a huge loss, because you're trading in a platform where the liquidity in the order book is completely broken, which is not built for trading at all. And basically, you're driving in a road which is made up of, you know, a lot of potholes, and you will end up causing an accident regardless of your fault. You know, however careful you are, because the platform itself is not supporting it, you will end up with a big loss. The risk in crypto itself is generally high, and the effort and the risk for trading is extremely high. You need to be really observant, you need to be really careful, you need to spend a lot of time. And in your investment scenario, you're basically holding long-term hold. You can be patient, you can withstand price drops, you know, even if it drops 30%, 40%. XRP, for example, I was waiting for 2 years, and the price dropped to nearly 70% of what I had bought. But eventually, after 2 years, I was able to sell it at a decent profit, and in fact, I got a lot more than what I had invested. So in trading, however, you know, price drops are very frequent, and you could end up, if you're not clear enough in your mind with regards to what you're ending, like the scenario that I said, you could have bought it for $100, you could have sold it for like $95, could end up with a loss as well. So that needs to be also compensated in your next deal. So this could also be taken out by the fees, the profits that you make. The trading platforms all operate on a fee basis. Even if they say no fees, right? The fees is actually hidden into the transaction itself. They might be actually increasing the price or decreasing the price of your sale for them to say that there is no fee. So no, never look for cheaper alternatives just because they're just saying cheap. Understand they're cheap as well as they're offering the competitive price. The biggest mistake people make is greed, buying when the things is going up and buying with more money than we can afford. Everybody's FOMOing onto it, or they're rushing onto it thinking that this is an opportunity, and without thinking they're actually going and buying more. So impulsive buying, right? That's what is the bigger risk. The other benefit is that if you do it correctly, if you do it at the right time, you could even make 100% profit in one day. And if you have enough time in the day and enough patience, normal days, even without big fluctuations, you can trade. So some major disclaimers, right? I am not a trading expert, and I've mentioned this repeatedly in many of my videos. A lot of these concepts are what I had self-taught myself. I've learned in the recent months, in the recent year, and I'm still learning on a daily basis. I know very little in the context of crypto, blockchain, investment. I know very little. I am not an expert by any means. I'm only trying to explain whatever I know. So that's the main thing. I'm still learning on a daily basis. And I'm not an investment advisor. This is not, my videos are not for investment advice. They are for learning. They are for teaching or explaining in simple terms. Sometimes people find it difficult to understand some of the complex terminology. So I explain it in a simpler language which people find it easier to understand, which is why I do these videos. They're not for investment advice. They're not for people they're not for telling people that you go and buy this and you'll make money. That's not the intent of these videos. That's a byproduct of learning, and that's a byproduct of getting the knowledge to be able to do that. I'm not a broker or a trader by profession. I have a separate profession. This is something that I do because I like to explain to people what I know. And I'm only sharing what I have learned and what works for me. Individually, the trading term would mean different things for different people. For a professional trader, he could be doing it with a larger risk, could be doing it in a much more advanced level than what I'm doing. I am teaching you something that I feel is safer, in my opinion, that works for me. And I'll not do some of the tradings like derivatives trading, for example. I explained in my episode 5 why I won't do derivatives tradings and why it is a higher risk. I won't do leveraged intraday trading. There are things that I will not do. So my trading definition will obviously be different because I'm not going to do these things. And I'll not use the crypto that I do not believe in. For example, in episode 6, I talked about a few coins. Regardless of whether or not there is an opportunity, that's basically scamming somebody else and you're benefiting from somebody else actually losing their money. So first of all, ethically, it's not my choice. And I would not go and do a trade even though there is an opportunity to trade in those coins. So, I explained what those scam coins are in episode 6 as an example. So I'll not use those coins. I'll only stick to those coins that I strongly believe in, and I've understood the details of that particular crypto, and there is a blockchain behind it. Also, if you looked at my episode 1 and episode 2, you will know that before I invest in a coin, how much I understand about the volume, the available supply, the market capital, the use case, the technical details behind it. And only if you're able to validate all of this, then go ahead and invest in that coin. Just don't blindly go and invest it because you've seen the charts and you've seen somebody telling you that it's going to go up. Do not believe them. And I don't believe anybody who uses charts and calendars, because crypto does not follow charts and calendars. Crypto is not like share trading. It doesn't follow your charts and candles like your shares do. And even I don't follow any of these crypto experts. I don't actively trade. I'm not a trader, like I said, but if there is an opportunity, I'm going to explain the Coinbase listing in this video. Then I go and trade because there is an opportunity to do it. And I only use the platforms that I'm personally comfortable with. I've used it many times. I'm going to explain what platforms I use. If you haven't seen some of my episodes, for example, episode 1, 2, and 3, then at least those ones I would suggest that you watch it fully before you are able to get a full understanding of this video and trading in its entirety. And again, before investing your money, the more important aspect that you need to invest is your time to understand the basics fully. So my trading strategy is very simple. Safety first before profits. So what exactly is my strategy, right? So my primary objective, like I've always explained, is hodl. Hodl is, hold on to your dear life, which means that if I decide that this particular coin is going to go up, I buy it and I wait patiently for it to become higher or go up basically. And if I decide to trade in that coin also, I'll not trade more than 20% of the portfolio. For example, if I have 1000 ZAP, that's one of my top portfolios, I will not trade more than 200 of the ZAP. The reason is if I sell it at a small profit and then it immediately goes up like 100%, 200%, I would have waited for months. And I've actually sold, all of my coins if I had sold everything. That means that I can, it doesn't make any sense out of, holding it for that many months if I'm actually going to do trading with it. So, which means if I'm going to trade it, and I believe that any point of time it could go up, 100% or 200% or 500%, then I don't really want to sell it for a small profit, which means I'll trade only with a small portion of it. Any point of time, I'll buy and sell only 20% of my portfolio. That's how I'll do it. So ZAP, for example, I made a video in August, September 2020, and it had gone up nearly 300-400% in like 2-3 days at times in these 3 months. It had gone down, come back again. So, if you had held it and you were just hodling it, then you could have sold it for a 400% profit. So if you have invested, let's say 10,000 rupees in it, you could have actually taken out 30,000, 35,000 rupees as a profit from it just by holding it without doing any trading. So which is very difficult to achieve in a trading scenario. You have to do so much effort to get that kind of profit. So ultimately, that's my main aim. And most of the time, I trade only with those 10 cryptos that I talked about in my episode 2. As I know the price, I know the history of that price, and I know if the price goes down, then I can hold it for many days and many months. Like ZAP, for example, if it falls down 50%, I know that I can hold it for many days. I know one day it will definitely go up to the level that I'm expecting it to. So for example, if I buy at 10 rupees one day and then, I'm expecting it to go up to 12 rupees and it doesn't and it falls down, right? Let's say it falls down to 7 rupees. I can hold it. I can hold it for many days because that's my strategy. Because I only use 20% of my portfolio to do it. And as a principle, I don't sell at a loss because, I can afford to keep it at a paper loss level. That, for example, the XRP I waited for 2 years, right? It didn't sell at a loss. The reason is once you start accepting even a 5-pound loss or a 10% loss, right? It becomes a habit. And then you keep thinking that, okay, I can manage this loss in my next sale. I can recover my loss from this sale in my next profit. And then you keep carrying on your loss. It then becomes like a gambling, right? So the main point is to stick to your basics. Stick to the fact that you're not going to sell at a loss. Be patient. So patience is a big keyword here. And I never use market trades because if you use market trades, that means that you're basically telling a trader, whatever the price is, I'm willing to buy or sell, which is completely the wrong thing to do in trading. And you always use limit buys and limit sells in exchanges. This is very important. I'll demonstrate what it means to do a limit buy or a limit sale in my end of the video. In all of the platforms that I'm talking about. This cuts down the losses enormously and it's consistently worked for me in the last 10 months. And always plan. Don't do instinctive decisions. Except for a very, very exception scenario, I always use my template for planning and I'll share that template as well. It's an Excel template. I'll share it free in this description and you can use that template and show you how to use the template as well. And if you keep a minimum 4% margin, that also covers your 0.5% average fees basically. So the exceptions to this crypto trading, right, are when new crypto is listed in a platform like Coinbase or in multiple platforms. For example, when a crypto gets listed in Coinbase is like the benchmark of all exchanges, right? So when a crypto gets listed, GRT, BNT, DNT, NU, all of these I tweeted in my Twitter account. And whenever this gets listed, I tweet it immediately and it has gone up like 100%, 200%. Sometimes DNT, for example, went up like nearly 600, 800% as well. So Coinbase, when it gets listed, there is a lot of people actually coming in to buy it because they only buy it in Coinbase. So when new crypto gets listed in multiple exchanges also, it gets promoted. So there is a lot of volatility. So even if I don't know the crypto as much as I do my top 10 portfolio, if I understand basically what that crypto is doing, then I actually go and invest it. And that's like a quick trade where in 2 or 3 days you can actually make quicker profit. And I'll explain also with a demo of the Coinbase scenario. And complete demo, I'll show you what it means for these exceptions. And specifically some cryptos, even though I'm not believing in the long-term scenario, when it's actually doing a lot of volatility, a lot of moving up and down, and I believe that there is a smaller risk appetite, a smaller threshold for cryptos, I do trading under $100. I'll again show you an example of what I'm talking about. Example is HOT is a token, HOLO is the token. I'll show you what kind of trading I did and what kind of profits I was talking about. So again, most important is risk appetite will be different for everyone. I might be talking $100 easily. For somebody in India, $100 might be a lot of money. So you need to decide what your risk appetite is, what your lower threshold is, higher threshold is. And don't invest your money, or don't trade with the money that you need for your basic needs. I repeat it again and again. Also, instead of trading with INR, it actually makes more sense to deal with USDT or USDC. USDT and USDC are stable coins. I'll explain what stable coins are in a few minutes. But they are basically tethered to $1. So it's easier to trade with the stable coins like USDT or USDC. So you can actually link it to a price chart, a normal price chart. If you link it to, if you trade with INR, you are actually doing multiple price conversions at the same point of time, and it's very difficult to actually manage the price fluctuation if you trade with INR. So it is actually more advantageous to trade with these tether coins or the stable coins. I'll explain why it is in a bit more detail in the next slides. Like I explained, right, I'm going to be mainly doing a demo with a few of the platforms that I have been using. And these are the platforms that I'm recommending. Again, I've kind of classified them as beginner, intermediate, expert, and some of the platforms are acceptable. In my description of the video, I've given the referral links, the sign up links for them if you have already not signed up from my previous videos. Binance especially is the first time I'm talking about it, so the sign up link is there. So if you have not signed up to Binance, you can actually click this link and sign up. And again, you are welcome to go and directly sign up as well. Don't need to use the link from the description if you want to. But most of these, the detailed sign up process I've already explained in my other videos. So the sign up process is very simple. Once you click on it, you'll be taken to the website for the sign up, and you primarily use your email and set up a password and sign up, and you'll go through a mobile verification, know your customer, KYC verification using a document, and then you will set up a two-factor authentication, which I've shown in detail in my episode 3 and the subsequent episodes on how to do your registration for a cryptocurrency exchange. Pretty much the Binance registration is also an exactly similar process. And all of the other platforms like crypto.com and Bitrue and everything else, WazirX, I've already shown detailed demo in my episode 3, 4, 5, and 6 about how to set up your account in those crypto platforms. You can refer to it, and then you can do the Binance registration if you have any doubts. But why have I classified these into beginner, intermediate? I'll explain why. So Coinbase is by default the gold standard of the benchmark for crypto wallets or exchanges. First thing is there is no fees to convert your USDC to USDC is the tether coin that we spoke about, to any other crypto. In fact, any crypto to crypto conversion in Coinbase is actually fees free. So there is no fees, and it's instantly converted. You're not waiting for liquidity. You're not waiting for market makers. You're not waiting for any order book or anything like that. It's a very simple process. I'll show you the demo and you'll see how quick and easy it is. And it's instantaneous conversion. You pretty much click on convert and one crypto is converted to the other crypto convert. So the liquidity is amazing in that you don't really need to wait for it. The user interface is probably the most easiest, and for learning cryptocurrency conversion, this is actually the starting place. Basically, this is like your first car that you want to drive, right? That's like this. And it's probably the mobile version of it. I mean, you can access it. You can access Coinbase from your laptop as well as your mobile wallet. The mobile app is probably also one of the best designed mobile apps for manual trading. The ease of use is really good. And they use one of the crypto trading pairs with a stable coin called USDC, which actually is a collaborated stable coin by Coinbase themselves. And it's probably one of the best stable coins in my view, and we'll talk about it more in a minute. But the price charts are visible in the screen itself in Coinbase, and it's probably more easier to understand the price chart of Coinbase, unlike many other apps. And you don't have to go to a third-party website like CoinStats. We spoke about it in one of the episodes. You don't have to go. You can actually do it in Coinbase itself. The things that work against Coinbase are you need to be really quick on the conversion, because a lot of things are done manually. There is no way to set up limit price and limit buys and automatically do it like I'm going to show you later on the demo. That cannot be done. And because you're doing it manually, a bit of solid mental max is really required, because you need to really do a bit of calculation in your mind, whether or not you bought it at a lesser price and whether or not you're selling it at a higher price. You need to do a little bit of calculation in your mind. And generally, when a coin gets listed in Coinbase, it shoots up. So by the time you're buying, you're already behind the curve. You're already kind of buying after a little bit of 50% or 20% hike to the price. So it's already up, and you probably want to buy it before it actually comes onto Coinbase, because a lot of people actually do that. They only buy the coin the first time when it comes onto Coinbase, which is why the price shoots up. So what about intermediates? Like, once you've started with the process and you kind of done some manual trading, now you understand the hang of it. That's when you go on to maybe crypto.com or Bitrue. In my opinion, they're probably like well balanced between the trading functionality and the ease of use and the liquidity that it offers. So crypto.com, for example, every platform has got a little bit of fee reduction process, where you have to maintain the crypto like in WazirX, probably you have to maintain WRX currency, like I talked about. In Bitrue, you have to maintain BTR balance. Then only you can pay in the BTR or WRX and reduce your fee structure. But in crypto.com, more than 50%, almost 60-70% of the fees is refunded if you stake CRO in terms of a CRO. So you don't need to actually maintain a balance. You can actually get more than 50% of the fees back as a rebate. And that's one of the best functionality in terms of trading fees for crypto.com that I found. I found it really useful. And both of them support USDT pairing. So again, a very stable coin that very good stable coin that you can actually pair with. And it's easier to then track to a USD price chart. The additional advantage of trading with crypto.com is, like I explained in the crypto.com exchange video, I think it was episode 8, where you can also participate in syndication events where you can buy crypto at a 50% discount. And you can use these refunded fees that you get from trading to actually buy the crypto. So you do two things in the same time. The limit price for crypto.com, when you see the demo, you'll realize it actually gives you a pre-filled price based on what it judges to be the average price at that point of time, the market makers order book value. And that's actually easier to then judge the entry price, and when you're buying it, it's actually quite useful. When it's selling, obviously we're going to set our targets, as we'll explain. And for Bitrue perspective, Zap trading is probably very few platforms support Zap trading, and Zap has got probably the most volatility, and I've probably bought it and sold it the most in terms of my trading. So I think Zap trading, from that perspective, I like Bitrue, because that's the only platform that actually supports liquidity with Zap trading, I would say. Mobile app is not so great, in fact, for both platforms, because first of all, crypto.com mobile app doesn't exist. The mobile app is different from the exchange. And Bitrue, there is a mobile app, and you probably need to get a lot used to it. Initially, it is very, very confusing to use. In fact, I didn't even find where to trade for a few minutes once I started using the Bitrue mobile app. And Bitrue doesn't provide a default limit price, unlike crypto.com. So initially, you are manually deciding even the buy price. So been useful to provide some sort of a guidance value, but then you can see the other order book values, and then you can decide. And you can easily mistake by entering a wrong limit price. So Binance is probably the Ferrari or Bugatti of exchanges. It's literally like the top end, the Harley Davidsons of the bikes, I would say. It's literally has got the highest liquidity, and probably supports the most trading pairs and the most cryptos in all of the exchanges combined. No question about it. It's like the ultimate pinnacle of crypto exchanges that you want to actually go and trade with once you are comfortable with the trading process. And it supports USDT, USDC, and lot more stable coins and lot more crypto trading pairs that you can actually convert between. And bank deposits in most countries, I think in India it's still not supported, but in most countries it's supported at a zero fees, which means that you can actually use your bank to deposit at a 0% fees. But like in most other crypto platforms, they take 3.5% to even deposit or even buy crypto. So credit card and debit card purchases are also supported. There are more often than not, there are promotions running where it's also 0%. But I don't think it's working in India. People have commented in the Tamil video as well that credit card, debit card for Binance directly is not working. Mobile app for such a complex exchange is probably one of the best designed mobile apps in terms of the trading platforms. The integration with WazirX is there because Binance now owns WazirX, so you can actually link your Binance account to your WazirX account, And even if you have signed up previously for WazirX separately, once you sign up with Binance, you can link both accounts together using your email address, and you can transfer between your Binance and WazirX. Basically, from WazirX, you can transfer a few of the currencies for free, and it's very quick transfer to transfer it from your WazirX to Binance. You don't have to enter any address or anything. You can basically say transfer it to Binance. So that's an easy option. And what goes against it is probably, like I said, it's the most complex platform. There are a lot of options. There is basically too many derivative products. I mean, when we see the demo, you will realize the number of options that are there for simple trading. You can actually make mistakes because starters will get probably it's too overwhelming for starters and intermediates to actually go and start trading in Binance because of the number of options that it offers. It's like basically you're starting to ride a bike and you are immediately asked to drive a Harley Davidson or a Ducati. You will struggle. That's what I would equate it with. Again, the WazirX free transfers, it says it's for a limited time only. So I don't know what it means that once the limited period offers, what is the fees that will come into picture, despite the fact that there is an integration in place. WazirX direct trading, probably I think it's okay. In fact, in all of the Indian crypto exchanges that I have seen so far, it's probably one of the exchanges that has got the best liquidity on offer, the best market maker, and the order book on offer. It's in fact a lot of order books in India in trading platforms, they're completely broken. I even did a complete demo in episode 14 to show that how much the order books are broken and how much of liquidity issues are there in the order books in Indian exchanges that you can easily buy and sell for a wrong value. Totally, you can buy for a higher value and totally sell for a lower value. So WazirX is probably one of the platforms that offers the best liquidity out there in Indian platform as such, if you really want to trade within the Indian platform. Otherwise, suggestion is to take it to a one of those other platforms and then trade it. Use it only for the bank integration. There are other exchanges that I have not considered. For example, Coinbase Pro is one of the popular exchanges. It's got sufficient liquidity, but there are other problems that I personally found. It was down when you really want to sell it. It actually goes down sometimes, and it looks as if they are purposefully doing it. But then there's there's too many mistakes that I didn't want to actually go and use Coinbase Pro. The other Indian exchanges, we've already talked about it. Most that I've tried has got liquidity issues, and I explained it with the demo in episode 14. That I don't even want to go and trade or even do normal investment scenarios. I really don't want to go and buy it in those Indian exchanges, which is why I don't use them. And I don't trust some of the exchanges with my funds. Example, Poloniex. It's a good liquidity platform, but there's a lot of shady things about it that I felt personally that I don't want to actually invest in it. That's just a personal decision completely. There are some platforms and exchanges which are too dodgy in terms of terms and conditions. There's one called Pocket, for example. There's a very dodgy ownership in the terms and conditions that you really don't want to actually go and put your money into it, because they're basically taking away your crypto despite the fact that they might make more money out of it. So, and then there are some platforms which got a dodgy ownership. You really don't know which is the venture capital behind them. So they might take away your money and run away with it. So that's just personal opinion. And I stick to the ones that I've, of the 20-25 exchanges that I've tried, these are the ones that I am more comfortable, which is why I'm sticking to them. And so talking about stable coins, there are two popular stable coins. There are a lot of stable coins, but DAI is one of them. There are many other stable coins as well. But USDT and USDC are one of the popularly used stablecoins. Stablecoin is basically a cryptocurrency by itself and is tethered to $1, which means that there is a real world currency backing these stablecoins. Like for example, if there is 10 million USDT in circulation, there has to be 10 million US dollars in some bank account or in some place that is actually backing up this cryptocurrency. There's a real world currency behind it. Although there is a bit of contradiction to that fact, but primarily that's the objective of these stable coins. That is backed up by real world fiat currencies. So Tether Limited is the corporation behind USDT, and USDC is another stable coin that is actually created in collaboration with Coinbase. So I would prefer using USDC, but in most platforms USDT is what is used. So wherever it's available, I'll use it depending on what it is. But these two are probably the top two recommended stable coins to trade with. The reason is it's easier to actually trade with the stable coin and match it to the dollar price. Otherwise, you are basically converting from USD to INR and then USD to the cryptocurrency, and you're doing a double conversion. So what do you do if you're going to trade with Coinbase, Bitrue, or Binance, because the INR is not supported in those platforms, right? So if you're outside India, then you can buy directly in Coinbase or Bitrue or Binance easily and then start trading. Nothing else. Direct option is available. But if you're in India, you can't use your debit card or your bank account with Binance or Coinbase or Bitrue directly. So what do? So then you use your Indian crypto account, right? For example, if you want to do it in Coinbase, Bitrue, then you use your Indian crypto account like WazirX or GeoTest or whatever it is that you're using just for the bank deposit and withdraw, and just buy one crypto. And you buy that crypto, and the purpose of buying the crypto is to send it to the Coinbase, Bitrue, or Binance like a bridge. Basically, you're using it to transfer money. That's all you're using it for. You're not using it for trading. And usually I suggest XRP, but XRP has gone through so much of volatility. So you could use something like Atom or TRX or something that's got lower volatility, means the price is not moving too much. The reason is these currencies, cryptocurrencies, has low transfer fees. Like for example, if you use Ethereum, for example, transferring 200 rupees of Ethereum, you will end up paying 300 rupees in fees itself. So it's not worth it. You are paying more fees for transferring a lower value of cryptocurrency. Whereas in other currencies like XRP, you're transferring 200 rupees, you will end up spending like 10 rupees, 20 rupees. So it's more advantageous to use currencies which has lower transfer fees. So you buy with INR in TRX, Atom or something, and then you send it. And once you send it to Coinbase, then you convert it to USDT or USDC, and then you use it for trading inside that platform. And finally, when you have finished trading, you take the USDT and come back. I mean, when you want to withdraw it, bring the USDT back to your WazirX or JTS, and then sell it here through crypto of XRP or TRX or Atom. I mean, I won't use XRP because of the volatility, but that currency, that TRX or Atom that you're using, is basically like a bridge, because they are lower transfer cryptos, lower fee transfer cryptos, and it's faster to transfer itself. So the only purpose of buying Atom or TRX is because they are a little bit stable and it's faster to transfer it. So if you decide to trade in WazirX, then you can actually buy USDT using your INR and then trade using USDT pairs rather than INR pairs. Then you're not bothered about the INR price fluctuation with USDT. That way you are you're easily tracking to the prices in the price charts. So otherwise, what you're doing to do is your first price exchange that you're keeping in mind is the conversion between USD to INR, USDT to INR, the crypto value between USDT to INR, and then the crypto value between USD to that Bitcoin or whatever that you're buying and selling. So there is a double conversion that always happens. And if you do it this way, if you convert it to USDT and always use USDT to do your trading, I'll show you in the demo what that means. Then you actually track your prices through CoinStats, fix your prices, and you can use the template that I'm giving. And it's a very accurate, to the decimal point prediction of what the price is, what the value is going to be. So if you're going to trade in Binance and you have a WazirX account, then like I said, you can buy USDT directly. You don't need to buy these intermediate currencies, cryptos like TRX, Atom or whatever. You can directly buy USDT and transfer USDT free to Binance. I'll show you that as well in the demo. So obviously INR to USDT is about 78 rupees roughly. And so if you're buying with 5,000 rupees, you'll get that equivalent of USDT. So I'm going to explain the Coinbase platform, but we're going to basically be looking at a new cryptocurrency called GRT that was recently launched in Coinbase. I even tweeted about it. And we'll see how the price went up in a span of 24 hours, 48 hours, and how much it actually went up, nearly 500%. But we'll use this, and we'll show you a Coinbase. I'll show you a Coinbase demo and show you how to take out profits, when to take out profits, and how to do the trading in Coinbase. So I'll do a demo in this. So in Coinbase, for example, if you want to change the currency from one cryptocurrency to another, you click on the 2 arrow icon, the blue icon, and you click on convert in that. So you don't click on buy or sell, you click on convert, and then it gives you from cryptocurrency and to cryptocurrency. So in this example, I'm going to take USDC and I'm going to convert it to XRP for that matter. So if I say 20 pounds, in fact, you can set it to any currency, but you're basically converting USDC to XRP, and you click on convert and instantly it is converted. There is no waiting, there is no order book, nothing, and the fees is actually 0. So that's the main thing about it. So you click on convert. I'll show you one more time. And you can basically now, I'm going to convert it from XRP back to USDC for, let's say, as an example, right? So immediately 1 minute or 30 seconds after I've converted from USDC to XRP, I can convert it back from USDC to XRP, or XRP to USDC again. So now I'm putting in, like, let's say 10 pounds, and then I'm saying preview convert, and see the Coinbase fees is 0. So there's no hidden fees, and instantly it gets converted from one currency to another currency. So GRT was the graph was the new cryptocurrency. It was an indexing crypto that was introduced for the blockchain. It's a very interesting concept. Technically, it was a very interesting concept. But what you're looking at is the history of the last few days, or the 24-hour history that I was trading. And you can see that I've been converting it from the graph to the graph, from the graph to the graph. Like, every few minutes I've been converting it from and to the graph, and why have I been doing it? What did I achieve by doing this? Like, for example, 510 I sell it, for 532 I buy it again, 545 I again sell it. And then it just goes on. Every 10-15 minutes I keep repeating the same thing. So what have I been doing it, and why have I been doing it, and what's the benefit of doing it, right? So that's what I'm going to explain in this Excel now. So the last 4 or 5 cryptocurrencies that I tweeted about when they got listed from November onwards, right? Most of them have done really well. The reason is, when it gets listed in Coinbase, it provides an option for a lot of new entrants to basically enter the market, buy that cryptocurrency. So there is a lot of demand for that cryptocurrency, and naturally it goes up. And there is a validity as well. When Coinbase lists it gets a lot of validity and goes up. DNT, for example, nearly went up by 622%. NU went up by 192%. GRT recently went up by around 300% roughly. But after a point of time, after the first 3 or 4 days, it kind of drops, because once it has reached a peak point, it drops. Like, DNT went to about 420%. NU went from 192% to 77%. So how do you sell at the peak? You don't know, right? You don't know 600% is the peak or the 192% is the peak. And if you had waited for, like, for example, for a bigger peak for NU or a bigger peak for BNT, for example, it never even reached 100%. It went up to 65% and then it dropped. So you might end up with not making any profits at all, or you might end up losing all of the paper profits without actually selling anything. So the difficulty is to predict the peak price, and no one can actually predict the peak price. And there will be a huge drop from the peak price immediately. Like, it could drop from 600% to 400% in a matter of minutes. So how do you make sure that you actually realize some profit at least? And the goal is to at least make 100% of the profit wherever is possible. And really, the volatility will be too high during the first couple of days of any such listing. And history shows that that's more or less that's what happens with most of these cryptos that gets listed. And so it goes up, comes down. It kind of goes like this throughout the day. So I'll explain what happened to GRT. So I bought, I used Atom as the crypto, and I bought 250 pounds worth of crypto, like $337 at a price of about 17 pence, I would say. So I got about 1,466 GRT on the day that it was listed in Coinbase. And on that day evening, I basically sold it. It went up, price was about 23 cents in US dollar value, and it went up 26 cents. And I sold it once it went up and reached that point. And I got a tiny bit of profit, but then the reason was, I knew it was going to drop, and it dropped that night. And I bought back 576 crypto on that night. So the first day I didn't do much of trading, because it was going up and it wasn't that volatile that it was coming down. So I still had about 971 of the crypto remaining. So end position in Indian rupees, for example, was I spent about 25,000 rupees. My asset value was still 18,000 rupees. I had a cash balance of 10,000 rupees. I had sold some of it, which means that I have 4,000 rupees profits in cash, and 15% is the total benefit. But I still have some cash left. So day 2 started, where I started selling a little bit more, and then in the morning 9 o'clock onwards I started trading, where it came down, and I started buying. Again, I started selling when it went up, and I started buying when it went down. So it was kind of going up and down, and I knew when I was buying it that it's probably going to go up, because I had seen the peak prices. It went to 39 cents before. So when it came to 36 cents and 37 cents, I was buying it in tranches. The reason I say tranches is because I was always selling about $20, $30, even $10, small amounts that I was selling and buying. So I was staggering my buys and sells. That's called a staggering market trades basically. So I'm using small trades to buy and sell, and I'm predicting that it's going to go up. And if it doesn't go up, I'll start buying it back. So when I started selling from like, let's say 11:58 onwards, it was 44 pence, 44 cents, 45 cents, 52 cents. It went up to 56 cents and 57 cents, and then it started falling back again, 54.50, and then I started buying. Even though this is slightly higher than what I bought in the morning, now I know that it's gone to a peak price beyond that point. So I'm buying back what I have sold. So I'm basically continuously repeating the process of buying and selling in small amounts. So by doing that, what happened to my cash position at second day end, right? So my total amount investment was 25,000 rupees. Now I have 17,000 rupees in cash balance. My asset value is still about 28,000 rupees. So total profit is about 21,000 rupees, of which 17,000 is sitting in cash for me. Third day, I didn't trade beyond the first few hours, first 1 hour, because the whole day I was actually doing this video, I stopped trading. So at the position that I actually stopped trading, what happened was like roughly around only 1 hour of trading. What happened was my 25,000 rupees had converted into 55,000 rupees in total value. I still have 23,000 asset value. My cash balance is 32,000, which means that 118% of profit, of which most of it is already realized. My cash balance is more than the money that I had invested on Friday evening. And my asset value is still equal to my original investment, which means that I can take more if it actually goes more. So I've achieved what I wanted to achieve in terms of my cash position. So now I can let the crypto run to whatever value it can, and I can sell at whatever point it wants. And even if it falls down, I know I've already realized my profits. That's how you start taking profits. If you don't do it, and if you just wait for it to reach a peak point, it could fall. We don't know what the peak point is, and it could fall, and you might not make any profit at all. By doing this and staggering your sales and buys in small quantities, you're actually you can see the evidence there where my cash balance was more than the amount that I had invested, like not more than 48 hours before that point that I invested. So that's how you realize your profits. You never know what's the peak point, so you keep doing those small transactions that you can actually do it. And Coinbase, like I showed you, you can actually convert it from your one crypto to USDC and USDC back to that crypto, and you can do it in like 10 pounds, 20 pounds tranches. That is actually very easy to do it, buy and sell. But that's when you need to be really quick, and you really need to do a mental picture, like did I actually sell it higher than this? Which is why when the price falls down, and you can see the price chart in Coinbase itself, and you can actually keep buying it back in small tranches, and you shouldn't overdo any of it at any point of time. You won't see me buying like 20 times or selling 20 times without actually repeating the other process. So I wait for it to go up, sell it, wait for it to come down, then buy a bit again. So, and I kind of rinse and repeat process that helps me do something like this. So if you actually go through this video, if you don't understand it in first go through this again and look at that Excel that I have done time wise, and then you will get it as to what I've done and how I've achieved it. Now that's with regards to Coinbase trading. So this template is what I use for normal trading process, and I'll share this template with you in the description, and you can use it. You can basically copy the template and create your own template and start editing it. You can't edit the one that I share. You can copy it, duplicate it, and start editing it. And I'll use this template to walk you through the demo process as well. But here's what I do. I basically have a 3-stage process where I calculate, execute, and I complete. And in the 3-stage process, there are four amounts that are critical. One is the USDT price that I'm going to buy. Another is the USDT price that I'm going to sell. And the amount that I'm going to invest, that automatically calculates the quantity, and that automatically calculates the profit and the profit percentage that I'm going to get. So all you need to do is just put in the amounts in those 3 colored amounts, like the dollar amount that you're going to buy, the dollar amount you're going to sell, and the dollar amount that you're going to invest. Once you do that, the rest of the values are automatically calculated. So here is a small trade example where I bought one of those cryptos called HOT that I talked about, right? Where I was investing less than $100, and this is just a sample. In 5th of December, I opened a trade where I said, okay, I'm going to buy it at this price. I looked at the price chart and I looked at the volatility, and I said, I'm going to buy it this price. And I decided that I'm going to sell it at this price, which is because it's giving me more than 4% profit. So 4% is my minimum profit margin that I fix in my mind, because that's when it gives you over than your fees, then it starts giving you profits basically. So anything less than 4%, it doesn't justify the trade because there is a fees involved. So here obviously I'm using like less than $100 and $70 I buy and I sell it for $74 and I set the set limit. It's automatically bought. Nothing is done manually here. I'll show you in the demo what it means. The quantity is irrelevant at that point of time because all we are bothered about is we're buying at this dollar value with a total amount of this much, and we are selling at this dollar value with a total amount of this much, which gives me this much of profit. So the quantity is going to, in my mind, is going to remain the same. I'm not going to be bothered about it. It's all automatically calculated. So this is basically one of the examples where I waited for nearly more than a day. So I started this trade on 5th of December afternoon, and I initiated the sale on 5th of December afternoon once I finished buying it. And 7th of December morning is when it actually got completed. In fact, it took nearly 36 hours to get it completed. And you just wait for it to get completed. You don't actually do anything. It automatically gets completed. So I'll show you when I show you the demo, you'll understand this better. But this is basically to show you the timings of it. What time did I actually do the buy process? What time I initiated the sale process? What time the sale process completed? That's what is depicted in this example that I have done. This is a real example of what I have done it and when I have done it. Now, below that is crypto. This is done in Bitrue, for example. Next one is done in crypto.com. Now, this is a little bit high value trade where I'm buying for $572. Obviously, this is because I'm looking at XRP price charts and I kind of confidently know that it is actually going up. And it's going up quite quickly, which is why I'm investing that much amount. So 23rd night, November night, I'm at around 11 o'clock, I'm buying for $572 at a price of $0.62. And I fix a price of $0.68. It could exceed that, but that's the limit price that I'm setting. And before I get up in the morning, in the 24th morning at around 4:45, it gets executed. So I set it up on 23rd night, and by the time I get up in the morning on 24th, it is already executed, and I get a $53 profit. That's roughly around 9.3% profit. And so I've made nearly $53 profit out of a $572 investment. So that's like saying I put about 50,000 rupees and I'm getting I get about 5,000 rupees roughly. That's kind of equating to the buy or sell process. So there are times where I do a bit of a high value trade because I know this currency, I know the trend of this currency, and I trust it, and I kind of put that a little bit higher value trade. And if it doesn't go up, I'll not sell it, I'll wait for it to sell it. So that's the kind of risk that I take because I know the currency of XRP or ZAP or whatever it is. So I put a little bit higher amount or higher risk with it. And currencies like HOT, where I don't know the ecosystem too well, I take a lower risk about it. ZAP, for example, is one of the cryptos that I probably trade the most or probably do this the most with because the currency really fluctuates in value. So again, 4% is the minimum value that I set. Again, 27th morning, I set this process, and it took about 24 hours to finish the process. So it is in the third decimal point is where the price difference is. It's in fact $0.062 and $0.064. It's like the third decimal point correction. But because we are only bothered about the percentage gain, it actually automatically gives you a good price. So this basically a screenshot of when that happened and how that happened. You can go to the order history and actually go and see, because by the time you get up in the morning, you really don't know what time it has completed. Like 4:45 it completed in the morning in crypto.com. So I had to get up in the morning, looked at order history and look at what time it actually sold it. So that's the way to look at it. Order history is available in both Bitrue as well as in crypto.com. Again, in Bitrue or crypto.com, it might also be a split sales where it might have got filled in like 3 or 4 different transactions, but the order history will basically give you an average price at which it got sold. And like I said, the fee is there. 1 BTR is probably about less than 2 cents. So 1 BTR is like less than 2 cents of fees, and half BTR is like probably 1 cent or 2 cent fees. So there's like 0.5% fees involved, but that's like if you have a 4% minimum profit margin in your mind, then the fees is irrelevant. So we'll do a real world demo. So I'm going to take XRP, and this is a classic case where I remember I told you that I take a currency, and if it doesn't go up at all, then I just keep it. So in this example, when I initiated this demo process using XRP, it never actually went up, but I'm going to show you the demo process. So we'll start with WazirX. So I copy this, create a new line for every trade, and I'm going to use the price available in the chart. So the price that it tells me is that 0.5743 is the price that is there currently going in the market. So I use that to buy, so that I want to initially buy it instantly. And I keep setting different prices and see that what is giving me more than 4%. So 0.6 is giving me more than, 60 cents is giving me more than 4% profit. So I go here and then it's already in the limit price. That's what I'm buying. So I'm putting my my dollar amount and putting my price here to buy the USDT first. So this is the USDT buying process. So I've already bought the USDT now. Now I'm not going to trade with INR, I'm going to trade with the USDT like I explained. So you will see two things called limit and stop limit. Never use the stop limit, always use the limit option. So I'm using limit and I'm setting the price there and I'm clicking on buy. Now it is pending because there is a liquidity issue. So let it wait while it executes. We'll go and do the other one. But I'll note down the timing at which I place this order, and then we can come back and when it gets executed, we can note down the timing and we can update it. But that's basically WazirX initiated with regards to the price that we put in. I'm just slightly going to adjust the decimal point of the price that we actually entered in WazirX. So that's like the 4th decimal point, there was a one small correction. So we want to be really accurate to get the real percentage profit. So it's roughly about 4.5% profit, and you get about $4.5 profit with that kind of a sale. So like I said, the quantity is irrelevant, but note down the quantity so that you can enter the quantity on the screen. Now I'm going to do it in crypto.com. So again, in crypto.com and Bitrue, you click on that crypto, and then there is a trade button where you can trade with the pair. I'm going to use the pair of XRP USDT, like I said. So it defaults the limit price that it thinks is going in the market, and it's a bit useful to then start correcting it. So I'm going to put the quantity based on the Excel file that we have, and it says 99.93 USDT. That's fine. It's close enough to $100. So I'm going to buy XRP. Again, this is the crypto.com, and there is no open order. So I go to the order history and look at it, and it's actually immediately executed it. I submitted it 248, and immediately within 1 second it's got executed because of the liquidity that is available in these platforms. The order price has been immediately met, and in WazirX it is still pending at that point of time. So that shows you the liquidity option, the liquidity that is available in these platforms. So the order place date and order executed date is the same for Bitrue. Basically, it got immediately executed. Now I go to XRP USDT and I'm going to do the sell process. So again, I'm going to use the limit order, not the market order in between. So I'm going to say, I'm going to put the price that I wanted to sell at $0.6 or rather 60 cents, and I'm going to sell the whole quantity basically. And because that's the only quantity that I have. If you have already balance in your portfolio, then use the exact quantity that you just bought so that you can maintain that Excel calculation. So I have only that XRP, so I'm going to actually sell it. So the sell process has now been initiated and it's pending now. So I come back to this Excel and then I put in the date and the time at which I've initiated the sale process. So the exact same process now I'm going to repeat it in Bitrue now. So the same concept, but the WazirX is in executing stage. Now this is in calculation stage. Once I initiate it, it will go to the executing stage. So again, come to XRP, again click on the trade button, similar to the crypto.com format, except that the order screen is in the center, not in the right hand corner. So put in the limit price by 5743 and the quantity, and I just verify it and then click on the buy XRP. So the minute I click on the buy XRP, it says submitted successfully. And then if I go to open orders, there is no open order. So if I go to the order history, again here also I can see that it got executed in like 1 second. In fact, the price that it has executed, 0.57419, is less than the 0.5742 that we have entered in WazirX, which is still pending. So Bitrue actually I entered 0.5743, but it executed at a price much lower than that. And that shows you the liquidity available in Bitrue, for example. So I put 0.60, enter the quantity, and I click on the sell. Now the sell order is initiated now. So this is how I initiate. I buy in crypto.com, I sell in, I initiate the sale order in Bitrue. So I enter the dates and I say pending for crypto.com and Bitrue. Now I do it in Binance. Binance is basically again similar, but this time you'll see that the screen looks much more complicated. There are a lot more options. That's what we're going to see. So Binance, again, you can select XRP, and against XRP, you can go to the right, but even when you select XRP, you see XRP down, XRP up, and then there are so many other trading pairs. There are about 20 trading pairs just for XRP alone. So down and up are derivative products. First of all, they are shorting products. So you have to select the basic XRP. In other platforms, you had only XRP. Here you have more options there. So even when you selected just the XRP and gone to the screen, there are options like isolated 10x, 3x. Those are again derivative products. So you had derivatives in the first screen, you have derivatives here, and you have 5x, 3x, 10x. They're all multiple derivative products. So again, there is a limit, market, and stop limit. Don't use the market or stop limit. Always use the limit option. So once you've come to the limit option, then you select the quantity that you want, you select the price that you want, and click on buy XRP, and the buy is created, and again instantly it gets filled because the liquidity is really good. So it was in fact partially filled, and then within a couple of seconds it got filled completely. So Binance has also been completed. The buy process has been completed. So we put in the buy process, and by this time, if I go to the sell, and similar process like WazirX, and similar process like all of the other exchanges, I initiate the sell process, click on the sell XRP, and I note down the time that I actually initiated this sale process. By this time, WazirX is already completed. So if I go to the completed orders, I can see what time it has completed. So 2:59 is when it got completed. So I go and enter the time. So it took about 18 minutes for WazirX to fill the order that we had initiated. So now again, I come to the sell, click on the limit order and enter the quantity 0.60, and I initiate the sell order successfully. So I note down the timing against WazirX to say that, okay, this is the time I initiated the sell order for WazirX. So now I've done the buy and I've initiated the sell order for all the 4 platforms. So hopefully this was useful to you. Again, you can probably, if you didn't understand it, just go through that section that you didn't understand, then it will probably be more clearer to you. Thank you, and until next time, bye.